Well, let's welcome on board the management at Zensar as well, Mr. Manish Tandon, the CEO and MD at Zensar Technologies, joins us on the show right now. Manish, hi, good to be speaking with you. Thanks so much for making time and speaking with us. To begin with, help me understand the demand trends which are there, especially in the BFSI as well as high-tech vertical right now. With elections and rates, cuts just being around the corner, is there a bit of a fillip to the discretionary spends?
I would say that for us, BFSI seems to be doing quite okay. And technology TMT sector continues to struggle. The rate cut has still not happened. It is likely to happen soon. But again, we have been hearing about rate cuts for the last 2 years. We will see. We will cross the bridge when we come to it. But as of today, I don't see uh, too much changing than the situation maybe which was as of last quarter.
Also, sir, if you could tell us how has been the deal win momentum and any progress that we have seen in the client mining efforts?
I think we are doing quite okay. And as I've said before, order bookings, as long as our order bookings are in the range of 1 to 1.2 times our projected quarterly revenue, we typically do fine in that situation. And I think, again, this time we will be in that range overall.
Okay, so 1 to 1.2 times of your quarterly run rate is what you're looking at getting in terms of deal wins, and that's what you're expecting in this quarter as well. But could you talk to me about the latest acquisition that you did, Bridgeview? How's that scaling up? I know it's been only a limited amount of time that you've taken it up, but still, any initial sense?
It's too early to call out Bridgeview acquisition. As you know, it's barely a month. It's not even a month, actually, since we have started getting into it. We are not finding, good news is that we are not finding too many surprises. Things are going along expected lines as of now. And we remain quite excited about the asset.
Okay, point taken. But at the start of the quarter, you had alerted us that Q2 could be softer but on account of a client-specific issue, bankruptcy, etc. How's that faring versus expectation? Is it on similar lines, a bit worse or a bit better?
It is along expected lines.
Okay, so it's on expected lines, but margin too was a bit muted last quarter, right? With the wage hikes which are expected in Q2, are you expecting that margins will stay in the high teen range, or could there be a bit of a pressure?
And last time also it was hygiene levels. We have said that mid-teens EBITDA margin. Last time we were at 15.2 or 15.4, I guess. But this time again we have given salary hikes. Unlike some of our peers, we have on time given salary hikes, and it will have some impact on the bottom line.
Also, sir, if you could give us more information on what is the nature of the deal wins that you are getting right now. Apart from that, what is the role that Gen AI is playing when it comes to that is playing with client conversations currently?
Yeah, so I think order wins are a mix. There are mid-sized deals that are happening. There are smaller deals that are happening. There are a couple of largish deals also. And when I say small and mid and large, they are with respect to our size. So we are seeing a mix this quarter also. Gen AI, we are doing some very exciting work. Um, Instead of talking about things, futuristic things which are out there and may or may not happen, we are focused on creating value with the tools that are there. We have created 28 solutions, both horizontal and vertical, and wherever we have pitched, taken those solutions, the clients are pretty excited about it. But again, Gen AI is going to be a journey. The early signs for us in Zensar are pretty encouraging. Rest we'll see as we go along.
Okay, surely rest we'll see as we go along. But I wanted to come back to the point that you were making on high tech, that it continues to be muted right now. When, if at all, are you expecting a bit of a recovery? And the strength that we were seeing in healthcare and manufacturing, are you seeing sustainability in that?
So I think I think what is if you look at the TMT sector, I mean there is obviously the telecom sector which has been struggling, and I think the reason why it has been struggling is that the investments that the sector had made in 5G has not resulted in the kind of return on investment that everyone was expecting. Media also, there is a paradigm shift happening with cable bundles going away and direct consumer bundles appearing. So that also is in a bit of turmoil. Technology sector, I think the bulk of the investments are being directed towards the AI infrastructure creation. So as far as capital expenses are concerned, there are not too many dollars available for other things that are out there. Mostly, the companies are spending billions of dollars on creating AI data centers and so on. So not much is expected to happen in the services space in technology sector. I believe that the TMT sector will remain under stress for some time.
Sir, as you mentioned that active M&A deals regularly come to your desk, like every week they come, but anything that is at an advanced stage, also if you could share any details on what kind of a size are you looking at, any geography that you're focusing, any specific capability that you're looking at?
At any given instant, we have at least one or two non-binding offers in the market. So, which is the same state we are in even today. So there are one or two non-binding offers. There are a couple of things that are being worked on as we speak. So we remain committed to inorganic avenues of growth also.
Well, thank you, sir, for joining us and giving us all those details and for putting things into perspective.
If you like this video, then like, share and subscribe to ET Now.